Hi everyone, it's Paul Brown here from Wealth21. Put together a market update. It's Monday, the 6th of November. First of all, and importantly, anything in here is just general information only. It doesn't relate to your specific circumstances. If you have any questions relating to your investments, please give us a call or seek advice from an authorised financial advisor. Firstly, let's just run through the index returns to the 31st of October 2023. So you can see in the over the last few months, 2023 has been, the first half of the year was pretty good for the investment markets, but the third quarter and into the fourth quarter, it's been quite unfavourable conditions, and pretty much over the last 3 months, almost all asset classes except cash have fallen. And in fact, some asset classes, particularly property, is showing losses over the past year. So, but as we've discussed before, if you look at the 10-year returns, you get more results that you would expect with the growth assets providing the better longer-term returns over the past decade. So let's have a look at interest rates. Now, interest rates are currently sitting at 4.1%, have been for a few months now. With inflation re-emerging over the past couple of months, it's probably a better than 50% chance that we're going to have the Reserve Bank is going to raise interest rates tomorrow, Melbourne Cup Day. So we're more than likely to get a rate rise tomorrow. But as you can see, interest rates, this is a 10-year charter, much higher than they've been for at least a decade. Moving on to bond rates, and so with the inflation still persisting, just over recent weeks, the 10-year bond rate has spiked up again almost towards 5%, and that's higher than it's been in the past decade. So, that's why we can kind of anticipate that rates look like they're going to be increasing. The inverse chart of that is if you buy a bond fund. The inverse relationship is when bond rates rise, the price of bonds fall. So this is just an ETF, an Australian bond ETF, and you can see that it's at the lowest point it's been in the last decade. So moving on to the Australian share market. So this is the ASX 200 over the past 10 years. You can see the high point in the market was back in August 2021, and we're certainly at this point, that was around above 7,600, about 6,800 at the moment. So we're quite a way below the all-time high of the share market. Moving on to listed property securities, or AREITs. And again, you can see the peak in the market was towards the end of 2021 there, and the listed property market is well below that all-time high, and it's fallen over recent months. You might have noticed the returns over the past 3 months and 12 months are negative for listed property. International shares, though, has had more favourable returns. It's off the high that it reached sort of a few months ago, but international shares, this is obviously unhedged, so the Australian dollar has an impact on that because the dollar's been weak, and Australian international shares have produced better returns. And the last chart is the gold price. So gold over the past decade has risen a lot, and in recent times, because inflation, gold is often used as a hedge against inflation, because inflation has been persistent, the gold price, this is just a physical gold ETF. So that's the gold price has been very strong. Just a little quote from Benjamin Graham: the intelligent investor is a realist who sells to the optimists and buys from the pessimists. So in this sort of environment, it's very important to be realistic about expectations on investments. So there we have it, a bit of a market update. It's early November 2023. If you have any questions, please feel free to give us a call. Thank you.